All right, today we are digging deep into a real titan of the mining world, Southern Copper. Now, this company is one of the biggest and, frankly, one of the best copper producers on the entire planet. But, and this is the big question, does being a world-class company mean it's a world-class investment at its current price? Well, let's find out. And yeah, this is the question we're here to answer. It's so easy to fall in love with a great business, but is it a great investment? We're going to break down the company, crunch the numbers, and figure out if Southern Copper, that's ticker SCCO, is a hidden gem or maybe just an overpriced rock. Okay, first things first, before we can even think about judging the price tag, we have to understand what we're buying. So let's really get into the nuts and bolts of what makes this company such a giant in its field. So just to give you a sense of scale, we're talking about annual revenues of $13.4 billion. Yeah, this is not some little startup operation. Southern Copper is a global heavyweight with massive mines in places like Peru and Mexico. And get this, a 32% net margin. For a business like mining, which involves a ton of heavy equipment and massive costs, that is, well, it's exceptional. It tells you right away that these guys are incredibly good at turning rock in the ground into actual profit. And that quality, it's not a fluke. It shows up in their return on invested capital, or ROIC, which is over 21%. Now, in simple terms, that means for every single dollar they put back into the business, they generate over 21 cents in profit. You know, that's truly elite stuff, and it's the kind of performance you see in a fantastic company. So how do they do it? How do they pull off these incredible numbers? Well, it all comes down to what we call a competitive moat. And a moat really is just a company's special advantage, the thing that keeps the competition at bay. Southern Copper's moat is really built on two huge pillars. First, they have access to incredible high-grade copper reserves. And second, they are an extremely low-cost producer. That's the secret sauce behind those amazing margins. But here's the catch, and it is a big one. They have zero pricing power. Copper is a global commodity. Its price is set by the market, not by them. So while demand is huge, especially with the whole green energy transition, their fate is still tied to a price cycle they just can't control. So, you have these incredible strengths on one side, and this big, glaring weakness on the other. How do they stack up against each other? Let's try to weigh them out in a more structured way. Okay, this weighted analysis really lays it all out. You can see the company gets top marks for its strengths, things like cost leadership and that awesome ROIC. But it gets hammered on the risks, especially that commodity cycle and what we're calling valuation risk. That final score of 0.20 pretty much tells the story. This is an amazing operation that's carrying some seriously heavy baggage right now. And that brings us to the main event. We've looked at the business, we've weighed the risks. Now it is time to tackle the biggest risk of all, the price. So what is this world-class company actually worth?
I mean, that's the multi-billion-dollar question, isn't it? We know it's a great business, we've established that. But what is a fair price to pay for a piece of it? Well, before we get to our number, let's look at what the market is saying.
As of early this year, February 2026, the market has priced a single share of Southern Copper at $216. That's the price tag on the shelf, okay? Got that number in your head? 216. Now, for the value. Based on a deep dive into its cash flows and its earnings, our calculated intrinsic value comes out to just $94 a share. No, that is not a typo. There is a gigantic chasm between the market price and our estimate of what this company is really worth. So, where did we get that $94 number? Well, it comes from blending two pretty standard valuation models. The first is a discounted cash flow, or DCF model. It basically looks at all the future cash the company's going to make and pulls it back to today's value. That gives us $118. The second is a multiple to earnings model, which kind of compares its earnings power to other companies, and that gives us $70. We just average those two to get our conservative base case of 94. And this scenario analysis really drives the point home. Look, even in a wildly optimistic bull case, like we're assuming a massive, sustained copper supercycle, the value only gets up to $135 a share. The current market price of $216 is just, it's soaring way, way above even the most hopeful version of reality. Okay, so that valuation gap seems pretty clear, but let's bring this down to earth. Let's make it practical for you as an investor. How can you use this info to figure out the right price for you to pay based on your own financial goals? This table right here is a really powerful tool. It shows you the absolute maximum price you could pay today to hit a specific annual return over the next 16 years. So let's say your personal goal is a 9% annual return. If you follow that row across, you can see the price you need to pay is at or below $100. That's a whole different world from today's price of $216. And you know what? Your time horizon, how long you plan to invest, that matters a lot too. This table shows the price you'd need to pay to get that same 9% return, but over different time periods. You'll notice, for a shorter 5-year hold, you could technically pay more, up to 155. But the longer you plan to hold and let your money compound, the more critical your starting price becomes. Time is a huge help for investors, for sure. But even time can't fix the mistake of massively overpaying for something at the very beginning. Okay, let's wrap this all up. Let's bring all the pieces together and land on a final verdict for Southern Copper. If you only remember one single thing from this entire explainer, I want it to be this quote right here. Exceptional company, exceptionally expensive stock. It really says it all.
So let's just recap one more time. We have confirmed Southern Copper is an absolutely world-class miner. It's incredibly profitable because it's so good at keeping costs low. But its fate is tied to the crazy volatile copper market. Right now, the stock is being priced as if nothing could possibly go wrong, and that leaves absolutely no margin of safety for an investor. Paying more than double what it's probably worth is a huge gamble, and it's a gamble that history shows very rarely pays off in the long run.
So a great business does not always equal a great investment. It's like the old saying goes, price is what you pay, but value is what you get. So what company's value should we dig into next? Go ahead and let us know down in the comments.